Eric Muadid, with another educational video. In this one, we are going to be taking a look at the possibility of buying and the timing involved in buying instruments that have already moved. Now, before I go into the timing here, one thing I'd like to mention is there's a simple rule in terms of timing breakouts that I, for some reason, haven't mentioned, but it is called the 5 to 7 breakout in a stock or any trading instrument. Whenever you see 5 to 7 successful monthly breakouts in a stock over a period of about 1 to 2 years, maybe even about 18 months, let's just call it about 18 months, but it is a rough estimate. Anything from 5 to 7 breakouts, and I'm talking about successful breakouts, you have to be a little bit aware that the stock technically could be due for some type of a major correction. And it is very simple to count these 5 to 7 breakouts. For example, in this idea here, FBT, which is a biotech index fund, if we go back to the breakout even here, we see breakout number 1 successful. There's another breakout here on a monthly chart which was successful. There's another breakout here which is successful. Eventually another breakout here which is successful. Another breakout here which is successful. So we've already seen 1, 2, 3, 4, 5 breakouts in about 2 years, between 2013 and 2015. So yes, it can still break out again, and the breakout level for my the way I look at things is we've had 1 month of rest, so the next breakout is if it breaks out above recent monthly closing highs, and that would be at 118.23. But here we see that this is an extended instrument because of the 5 to 7 breakouts requirement. That is an indication of a stock that is due for a major correction. So here we can go long, and the reason why we can go long is because, as you mentioned, the monthly RSI continues to trade above 69.10. In fact, the monthly RSI has stayed above 69.10 since 2013. So that's been about more than 2 years. And we can see that at least one of the MACDS is trading at multi-year highs. So the minimum requirements for the ultimate Muade breakout has been met. So in terms of timing here, this one is looking like it could move higher. The thing that I did mention here is that you gotta be careful with such strong moves, because after so many breakouts, eventually they do get tired. Now you can use this 5 to 7 breakout to see how extended a stock is, even on the month, on the weekly. And on the weekly here, we can see that just recently, if we go back to the most recent 2-year chart, there's a breakout here which is successful. There's a breakout here that, and by successful I mean that this market stayed above the breakout level after breaking out. There's another breakout somewhere here. Recently another breakout here, and another one here. There's so many. And another breakout here. So even on the weekly, we see multiple 1, 2, 3, 4, 5, 6. Over the last 2 years, the weekly breakouts have been too many. So what I'm saying here is, this is one you have to be a little bit careful, because if it takes any type of a stumble, it's gonna be for a good size correction. Now I want to talk about the timing here. Instead of waiting for the breakout, you can go to the daily and find an entry. And what I'm gonna do here, this is 1 year chart. I'm gonna go and show you a one year, 3 months, so 15-month daily chart, 15-month daily chart, because I want to capture this movement from here to this nice highs here, right? So we know it began here. This is the lows, and so we can draw a simple straight line with the RSI, which will be somewhere. This is where it broke out on the RSI. We draw a line, uniformity line there. And every time it goes below this line and back above it with uniform activity, you know the stock is a buy. So instead of waiting for the breakout at 118.23, I would use this as an entry level because we're timing it from a day-to-day off the high. So there's a nice hindsight entry here with uniform activity, hindsight entry here with uniform activity. Again, it touched a line with uniform activity, and what I'm getting at is over the last 2-3 days we've come below the line and back above it with what looks like a V-type formation. So instead of waiting for that monthly chart to break out, you can already see that the stock has pulled back significantly to where the daily chart is giving you a buy signal. So you go long here and ask questions later. So the other stock you are considering to buy is LUV. And before we go into the timing, number one, let's take a look at how many breakout it has had. On the monthly, it has had one breakout here, which was sometime in October of 2013. Since then, we haven't had another monthly breakout. You can see it went on 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 straight months to the upside. There was no rest period. You can take a look at how strong this monthly mountain is, which I call the MACDS Fast Mountain. So ever since it moved above 69.1 here, it has stayed above that. Stock continues to be strong on a technical level. The MACD, or at least one of the MACDs, is trading close to all-time highs, or at least multi-year highs. So the stock is strong. What we can do is, because we don't see breakout evidence here on the monthly, if we go to the weekly, and this is 2 years, we can see that on the weekly we can start seeing multiple breakouts. There was a breakout here, so let's count the breakouts. Nice breakout there. There's another breakout somewhere here. Successful breakout again here. By successful again, it's the breakout and the stock never looks back. You break out and you head higher. Another breakout here, which was successful. There's another breakout here, which is successful. And there's another breakout here, but this one has failed recently, so we will not count that. So we see we've had 1, 2, 3, 4, 5, 6 weekly breakouts that are successful. So any breakout in the future here is gonna be breakout number 7. So that's gonna be a little bit long in the tooth. So remember, we are staying away from stocks that have already seen 5 to 7 breakouts on the weekly or monthly. In fact, you want to go as close to the first breakout or second breakout as possible so you can get in before the subsequent breakouts. So that would be the way I would look at this. From a timing perspective, if you want to play the breakout, you can either use this recent monthly closing high, and the level there is 44. So 44.30 is a recent monthly closing low, monthly closing high, or you can use this recent all-time monthly closing high of 45.112 for your entry. So either this monthly breakout or this weekly breakout can still be your buy point. From a timing perspective, since the stock already is very strong, you can use the daily to see where you can go long by way of the uniformity method. We can use this entry here that took it to new highs, and so draw a straight line there and do it like that. You can see that the market has come close to there and held during these lows. It held here during these lows and held again here during these lows. And keep in mind that now we are looking at the market showing lower lows with improving technicals. So from a timing on a day-to-day basis, if you don't want to wait for the breakout, this would be where I would go long. Why? Because the stock has already given a rebound based on the uniformity method. Last but not least, let's take a look at one more stock which I had asked you the question of whether you could use the daily for a rebound. So this is just a random stock here that I was looking at, and it was pulling back as the market was pulling back too. This is how it looks on the weekly. This is how it looks on the monthly. That's the monthly. Monthly is very strong. You can see the monthly is about to break out to multi-year highs on the monthly RSI, and the MACDs are already trading at new highs. At least one of the MACDS is trading at 3-year highs. So the question I posed to you was whether the stock could be a rebound candidate, and I was using the daily. I want to show you what I was getting at, and you can see the stock has come back to the 50-day moving average. So if you are looking for a rebound entry, it's come back to the 50. So the one reason to be a little bit looking for an entry there. And also the most recent move began here off this recent lows, and so this short-term breakout began during this breakout above 50 here. So we draw a line there, and you can see that the market already has used this once before for a bounce, which was this lows, and recently it went below the green line and back above it. Because it already weaved itself below the line, the green line, and back above it, and also because it could very easily move back above 50, confirming that it has found rebound, this is where you want to go long a stock that you think could break out on the monthly. So if you're anticipating a monthly breakout and you don't want to wait for the monthly breakout, you can use this uniformity method to try and gauge where to go back into a stock that has already seen a short-term pullback. So the answer to the question was yes. The stock was a buy about 2 days ago or a day ago, because it came back and it seems to be showing signs of uniformity support back at the previous ideal entry point based off these lows. Eric Mwade, good luck, peace, and blessings. Woo!